Hello, and welcome to Explain the Charts, your go-to channel for detailed technical and fundamental analysis. Today is October 13th, 2025, and we are taking a deep dive into Microsoft, symbol Microsoft. There's a lot of conflicting information in the news lately, with some strong bullish calls clashing with broader market fears, and we'll break it all down. First, let's cover the recent events impacting the stock before we get into the technicals. On the bullish side, we have very strong institutional support. Just a few days ago, on October 9th, Morgan Stanley reiterated its overweight rating, calling Microsoft their top pick in large-cap software. They believe Microsoft is best positioned to capture a massive share of the spending on generative AI and the broader shift to the cloud. This sentiment was echoed by a Mizuho analyst earlier this month who, on October 3rd, called the stock free money around the $515 level, anticipating a rebound. Conversely, there are reasons for caution. Last month, on September 5th, the stock sank on news of new tariffs on foreign-made semiconductors and a weaker-than-expected jobs report, sparking fears of rising costs and economic slowdown. We also have some background noise about OpenAI potentially exploring other cloud partners like Oracle, which, while dismissed by some as a distant concern, still adds a layer of uncertainty. This mix of strong fundamental belief and macroeconomic fear has created some fascinating price action. Now, let's look at the daily chart to see how this has all played out. Microsoft had an incredible run-up this year, culminating in an all-time high of $555.45 in late July. This level now stands as the most significant long-term resistance to watch. Following that peak, we saw a massive sell-off on July 31st, a huge bearish candle that erased a significant portion of its recent gains, signaling a major trend reversal. The price then drifted lower through August, eventually finding a support base in the $495 to $505 range. After consolidating, the stock began to recover in September, fueled by that positive analyst sentiment we discussed. However, this recovery stalled just below the $530 level last week. The subsequent sharp decline last Friday, October 10th, saw the price fall to a low of $509.63, which is now our most critical immediate support level. If we zoom in on the action from September onwards, we can see a clear correlation between the news and the price. Here is the sharp, high-volume drop on September 5th, which aligns perfectly with the tariff and jobs report news. Then, you can see the rally that began in early October, which coincides directly with the bullish notes from Mizuho and Morgan Stanley. This climb failed to make a new high, and the rejection led to the steep drop we saw last Friday. This recent move suggests that despite the strong company-specific news, broader market fears are currently taking control of the price action. The battle between these forces is happening right now, making the current price levels extremely important. Let's switch to the hourly chart to examine the recent downtrend more closely. Here we can see the price was rejected from the $528 level on October 7th and began a steady decline. The selling pressure intensified significantly during the session on October 10th, with large red candles and an increase in volume. Right now, the price is in a tight consolidation pattern right on top of that critical $509 to $510 support area. For a bullish reversal, we would need to see the price firmly reclaim the $515 level and then challenge the resistance around $518. A failure to hold this $509 support on the hourly chart would be a strong bearish signal, suggesting the downtrend is likely to continue. Finally, for the day traders, let's look at the 15-minute chart. Over the last couple of sessions, the price has been trapped in a very narrow range, primarily between the low of $509.63 and short-term resistance around $512. Volume has tapered off, which is typical during consolidation before a larger move. Traders will be watching for a high-volume breakout from this range. A break above $512 could see a quick move towards the $515 area. Conversely, A decisive break below the $509.63 low would likely trigger further selling, with an initial target around the psychological $505 level. So, to recap everything, let's go back to the daily chart. The key price levels to watch are critical. Immediate support is the recent low at $509. Below that, the next major support zone is between $495 and $505. To the upside, immediate resistance is at $518, followed by the more significant barrier at the $528 to $530 zone. The ultimate resistance remains the all-time high near $555. Now for some potential scenarios. I believe there is a 60% probability for a bullish scenario where the strong institutional backing for Microsoft's AI dominance provides a floor. In this case, the stock would hold the $509 support and begin grinding back up to test the $530 resistance in the coming weeks. A break above that level would heavily reinforce this bullish outlook. On the other hand, there is a 40% probability for a bearish scenario where persistent macroeconomic fears drag the entire market down. If Microsoft breaks below $509 with conviction, the next target becomes that $495 support zone. A daily close below $495 would signal a much deeper correction could be underway. Keep an eye on volume. A high-volume move in either direction will likely signal the start of the next significant trend. Also, be aware of any upcoming earnings reports, as they will be a major catalyst for volatility. Finally, it's crucial to remember that this video is for informational and educational purposes only. It is not financial advice. Please do your own research and consult with a qualified financial advisor before making any investment decisions. Trading stocks involves risk, and you should never invest more than you are willing to lose. Thanks for watching Explain the Charts, and we'll see you in the next one.